Hi, welcome to this video, Dave, which is on Saturday, 27th of October. We're just going to be looking at some trade setups, going with the charts in a moment. Now, the setups all include the yen. We'll look at USD, JPY, Euro JPY, and CHF JPY. Now, in recent videos, we featured a lot of yen pairs, just so bullish of the yen. We think it's confirming a really big move to the upside that's got far further to run. We can see the yen. We see the yen being strong for months to come. Now, in terms of when we came into our yen pairs, we were looking, for 500 pips in terms of profit. We've got that basically in the crosses or near enough. Okay, USD JPY though has not moved too much yet. It's just a minor profit, but I think it'll play catch up. Also in the crosses, you are obviously going to get retracements in the yen. Those pullbacks will be buying opportunities. Now, in terms of the charts, we're going to go and have a look at them. Just for new viewers, we will keep the technical analysis very simple. We only focus on big levels that matter to key institutions. Now, to find those levels, we use our favourite report in Forex trading, which is the COT, the Commitment of Traders report. If you're unfamiliar with this tool, you can click on the link beneath this video and learn more about it. If you just want to watch the video through right now, just keep in mind what we want to do is always trade with smart money commercial hedgers when their positions diverge away from speculators. Also, when we do the charts, just keep in mind it is my view as of right now. It could change obviously in line with the market conditions. If you want all our trading techniques, our COT sentiment analysis and daily technical analysis of 12 major Forex pairs, you can get live access to our member center on the link beneath this video. Now we'll look at USD JPY first and take a look at the COT net traders positions. COT net traders positions, just for new viewers, it is always foreign currency first on the COT. So we've got Japanese yen against USD. We of course trade USD JPY. We'll reverse the chart around in a moment. We do our levels. This is just to see what the commercials and large speculators are doing. Now, got two setups isolated on the chart. Just for new viewers, how we became interested in the yen recently. This divergence over here, commercials very long, speculators very short. That's a year high divergence between the two groups. And what you see, a big move to the upside, and the commercials eventually clear out their longs right into that high. Now, we got really interested when it came down here, stepped up. This is an 8-month high, okay? And we thought there'd be a bounce in the yen, and the yen has bounced higher, obviously. Not obviously that much yet, okay? Now, is there more strength to come in the yen? I think so, because if you look at the commercials, last week they dropped down a bit to there. This week it's only a very minor drop off. Speculators still remain very opposed to the commercials, and they're forming a similar pattern in the other way. So just think there's more upside here. In terms of big divergences, I mean, all pairs have different personalities, the COT, but in terms of big divergences like we've got now, it favours more strength in the JPY. So let's reverse the chart round and get it to USD JPY so we can draw our levels. I'm going to actually very quickly, before I do my levels on the daily chart, just want to look at the weekly chart, something very significant on that as well. Weekly chart, this could just be very quick, just so we can see the big picture. It's just something significant on the weekly chart that backs up the daily chart, which I want to go through. I just put this commercial hedging level on here. This is where obviously we saw the commercials sell the dollar, buy the yen. Nice push down off the first one. Haven't seen much of the second one though, but obviously we hope yen is going to push the dollar down. Now, in terms of confirming a trend, one average that we always like is a 20. It could be a week or a day, okay? Now, in terms of, if you look at the dollar, it goes up quite nicely here, doesn't it? Gets through the 20-week moving average. Then it should find support if it's in bullish mode. So find support there, find support there, find support there, find support there. Trying to find support there, okay? That level, if it gives way, will be confirmation for us that the bears have got control, so to speak, and then we should move on to the downside. Yeah, plenty of downside potential, even if we just got to what happened on the previous spec commercial extreme down here. Okay, well over 500 pips, but I personally think we could go even lower than that. Right, let's go and draw our levels on the daily chart of entry, stop, and target. Draw levels. Just very quickly, just draw your attention to these 4 points here, because I think the commercials are so bullish because of these points here, and that's why we're bullish as well. Speculators obviously are still pretty bearish of the yen. Now, why are the commercials bullish? Well, in terms of point number one, interest rates. Japan has stimulus. That's against the US raising rates. So obviously the interest rate differential clearly favours the USD. Okay, that's what you read a lot of in the media, of why the USD should continue higher. But US rate rises going forward, fairly factored in. Japan stimulus, they've already made a small tweak to reducing it, and in the near future it'll be reduced. Okay, that's highly significant. That means this isn't going to get any worse, the interest rate differential. Now, another key point, Japan is the world's biggest creditor nation. Take businesses, private investors. I think they've got about 500 trillion in investments, huge percentage of that overseas. They're starting to bring that home now. We've got a more nervous market. Money is going back to Japan. Also, business conditions in Japan, the economy is picking up, it's attracting money back as well. So that is underpinning the yen. Okay, if we get big risk aversion, the Japanese always bring their money home quickly, and that will force the yen up. Overseas inflows. Japan, Japanese yen, #1 safe haven currency. So with nervousness around, overseas investors invest in the yen, and also big institutions love the JGB market, the world's second biggest bond market. Risk aversion, we've already got a bit of it. We get a lot of it, the yen will soar. Okay, so we think the yen should appreciate, obviously. Now, in terms of the chart, obviously there's the move through the hedging level 114, back through it, through the 20-day moving average, down, little poke back to it, down and off the lows. Okay, now obviously in terms of resistance, I think you've got resistance there on that trajectory line going through as tails and that body. The key level though is 113 now, because that is just behind the 20-day moving average and a round number. You can see over here it came down, and that should be a pretty firm level, and you've got the 20-day in between as well. Okay, so where would you want to come in? Let's just take coming in on weakness first of all. That double bottom here, that equates to the 20-week moving average within around 5 pips. Okay, just come through it. I'd say 111.60. If you come in on weakness, where would you place your stop? Back behind this level. We've got ours back behind second level. So that's 113, 20, we'll count that as one strong level. It's just back from the strong level behind that level. Okay, now let's say if you rallied, where would you come in? Well, if you get up towards 113 and the 20, just look for any failure at all, and you could go short in my view. Okay, where could we go to? We've already said 104, but there's levels in between. 110 is an obvious level here, but because the commercials are so short the USD long the yen, and the speculators, a lot of stops to be hit, I think we should overrun the 110 level and get down to 107.40. This is that, we found a bit of resistance, got through, then we pushed away from it. That is easily on the cards in my view. That's a 3-to-1 if you came in on weakness. Obviously, if you rally up, you've got to have some weakness into 113 to come in the market. Okay, so don't just jump in without weakness. Let's say, however, we were stopped out. What would we do? I'd immediately come back in through 113. Okay, I don't see us going above and holding above this level. We shall see. But to think, yeah, if we look, well, we're going to go and look at some of the crosses. The yen is really moving strongly, and I think this one could play catch up. We've only had like a small profit down here, about 100 pips. We're in at 112.70, 111.80. This one's way behind some of the other pairs where the yen is, like I said, moving strongly. Let's go and take a look at some pairs of those spreads, not spreads, sorry, crosses quickly. I said we're going to look at, what did I say, Euro JPY, CHF JPY, but also look at CAD JPY. I'm going to use our member center charts for these, and they're established trends. They're pretty easy to explain. So let's go to them now. Right, we're in our member center and just go and look at the three crosses quickly. There's fuller videos in our playlist on best trades, but here's the first one, Euro JPY. Let me make it a bit bigger. There we go. It's a really good COT trade, and you can see how the yen is really pushing the euro down. Up here, there's heavy commercial selling on the left. Big move down. Same happened up here. We think the same will happen again. We're not too far away now. Now, in terms of if you wanted to come into this pair, where would you come in? That level's pretty firm, 128.50. This is the level in the sand for us, that big red candle where it crosses with that one, okay? 20-day will creep down. So we're at 129.50. It's a good trade, 470 pips so far, more to come. Any rally, a sell. I think if we start to sell off on Monday, if there's risk aversion, you'll just tumble, okay? Good COT, commercial short position still in the market. Now, this level here, which is 125.50, that's the first level, okay? Look at the weekly. Next level down is 115, so a long way to go down. Now, in terms of the euro, I did do a video, I think it was on Thursday, discussing euro fundamentals. They're terrible. They're just going to get worse. The yen is on the up. Yeah, a lot of people think when you get a big trend, yeah, then it's going to have to retrace quite a lot, or a lot of people do. I just don't see this one retracing too much. Obviously, it's pretty spiky, but just keep your stop back behind the second level. So plenty more downside in that one. What do I need next? I need here, sorry. If I can get it to scroll. Oh, there we go. I want CHF JPY. Sorry, my mouse won't work. Okay, so there's a CHF JPY. This trade is one of those trades that just goes right. You're lucky, okay? That poked against the key weekly level. Commercial selling hard. Just came in on the reversal. It's just one-way traffic, bit of consolidation down off the lows. Is there much more upside? Might take this level out. 113, I think she's going to fade, okay? Stop behind that level. 20-day will obviously creep down. Long way to go on the downside. In terms of Swiss fundamentals, they've got stimulus. They're both safe havens. The yen is the bigger one. So the yen should continue to firm, okay? Now I've got this level down here at 108.80, but that's the weekly support level. I think we could get down to there. So this is a really good trend. Wish we could get more of them. What's the last one? CAD JPY. This one actually I was most enthusiastic for a big drop out of the three crosses that we've looked at. Yeah, last week I thought this one would go down the most. It's actually gone down the least. Okay. Basically, again, use the COT up here. When we jump up, heavy commercial selling. Nice slice of the 20 there, decisive. Nice poke, gets down or comes down. Now she's sitting down here. This one obviously is not such a good profit. Yeah, we're in at 88.65 and we're at 85.50, so just under 300. But against the other two crosses, it's the lagger. Okay, where could we rally to? I think 86 is on the cards. to sell it on weakness, it's going to have a real hard problem getting through here and 87, which I consider to be the real key resistance. Okay, now in terms of the Canadian dollar, I just think it's the most overvalued of the majors. I'm looking for a big decline. We've got 84 here as a support level, but I'm going for 81. Okay, then I'm going for 75. Good COT divergence as well, and I'm just hoping it really runs down. And in terms of the CAD, it will really suffer if we get big risk aversion. I think the bullish fundamentals are peaked. I've explained them in a video, again in the playlist, which you can go and check. All three crosses have done well. The USD is the lagger. But we'll see. I think the USD, like I said, could play catch up. There's plenty more yen pairs to look at as well. I've picked these out as my 4 favourites, and 80% of our exposure is to the yen. Okay, just feel it's the best currency at the moment. Which one would you trade? My own view is I'm trading all 4 with different weightings. Okay, I'm pretty mindful the USD might get a correction, which means the yen will really firm up on it. If we get safe haven buying, though, we're not going to get so much out of USD JPY. We'll get more out of these 3. So it kind of balances itself out, if that makes sense. So I think yen long-term bullish. We might change our mind, of course, but at this moment in time, you are going to get retracements in the yen, but I just feel any pullbacks, buy the yen. And I get kind of boring about the yen. I've done quite a few videos on it recently, but hey, just really like it. Okay, thank you very much for watching me as usual. Take care and have a good day.